And always remember to me that I need to record. Oh, sometimes I get a little bit tipsy and forget to record. So let's do it, guys. Let's do it. So guys, welcome. We're not missing anybody, right? No, I think we're good. Just let me check the attendance list. Let me check. Emiliano, who's Emiliano? No, nobody? No. You want someone to read? What? You want someone to read? No. Just I'm just watching the attendance list to see if everyone is in here, because we're missing Emiliano and we have two Abigails. I don't see two Abigails in here. We should be 7. We're missing one Abigail and Emiliano. Well, Jessica, Abigail. If you know them, can you tell them that we already started? Yeah, I'll type them. Thank you very much. And Jessica, Abigail, can you please turn on your cameras?
Yes, I can turn it in 5 minutes because I have an issue. Please.
Don't worry.
Okay, thank you.
And you, Jessica? Jessica, are you there? No? I think she left and she's coming back. Okay. Well, apparently, I hear you very, very low, David. Can you turn up the volume or get the microphone, get you closer to the microphone? Hello, Belen. Nice, thank you, welcome. Yes, much better. I texted them in a group we had and she told me they're coming, so they are coming. Sí, es que puse Abigail y Emiliano están en contacto. Yep. Está esperando el profe y me puso Jessica. Ya van. Nice, perfect. Okay, but let's I think we will do a refresh of what we saw last class, but let's go ahead to respect your time, guys, because you were in time. So today's goals, it's to learn what it's a balance sheet, what are the main elements of a balance sheet, learn what it's the income statement, what are the main elements of the income statement, and learn how to generate an accounting ledger. Guys, This is accounting 101. Okay. So I think this is the most important message of them all. This is what I want you to learn. And if you can handle this, you will be great in the accounting aspect. Okay. Then we can start with advanced topics. But please try to focus. And this is for myself. This is like the boring part. So if it gets a little bit boring, believe me, it will get more interesting. But this is like the, how can we say it? La talacha. Okay. If you know what I mean. So what is a balance sheet? A balance sheet is a financial statement that reports the company's assets, liabilities, and shareholders' equity at a specific point in time. So, are you going to upload the PowerPoint presentation? I'm going to upload the video, my friend. You will have always the video available in my YouTube channel with your playlist of financial direction, August 2022, and you have your content in there. So you won't lose any part of your content. This is the beauty of doing it online. So guys, Ernesto, Jessica, do you have a question?
Hi, yeah, I'm Abigail. I'm on Jessica's computer. My laptop is not working, but I'm with her.
Okay, nice. Perfect. And if you can turn on your camera,
Yes, give me a second, please.
it'd be better. Ernesto, do you have a question?
Yeah, I would like to go to the bathroom real quick, just so I don't miss out on any definitions, because I'm writing them down. I just like to go to the bathroom quickly.
Go ahead, go ahead.
All right, thank you.
This is the asking part. So, guys, what is an asset? Who can remember me the definition? David, I hear you very low. You have to turn on your volume or get closer to your microphone. Or can you write it down? Perfect. So what is an asset, guys? Abigail, Belen?
Real quickly, I was about to leave, then I heard the question. I think an asset is resources or right to claim something.
And what is the right to claim something?
Got me there. I don't remember.
Guys, when you sell something, like
That
let's
wasn't
take
active, right?
an asset, activo.
Okay.
If I sell something like this mug and tell you to pay me in 30 days, that's a credit sale. And that means that I have the right to claim something in 30 days, right? So that's an asset, the right to claim something. What is a liability? Anybody? No? Liabilities are obligations to pay. Okay? Learn the definitions. Assets are resources and the right to claim, el derecho de cobrar. Liabilities are obligations to pay. And what is the shareholder's equity? The shareholder's equity is a debt also, an obligation to pay. But the difference is that the shareholders own the company and have the right for the economic benefits of the company, meaning the profits. If the company runs some profits, they have the economic right, they have the rights for those economic benefits. Okay, what's the difference between a liability and equity? Is that the liabilities are debts. And rather than yes, I'm telling you that the shareholders is a debt with the shareholders, yes. But the important aspect in here is there's a difference in the risk. If there are no profits from the company, you won't pay anything to the shareholders. But what's the difference with the debts? Maybe I contracted a debt with a bank, and the bank, in order to lend me some money, requested to be backed up with my house. If I don't pay to the bank, they will take out my house. Okay. So what's the difference between liability and shareholders equity? That's a question.
There's a difference in the risk.
There's a difference in the risk. What is more risky?
The shareholders.
Why?
Because you don't have like an actual way to keep them.
Obligate them, no? Obligate them to pay you. Yes. And why should people wants to be a shareholder rather than a debtor, rather than a liability? Why would you prefer to be a shareholder if it has more risk?
Maybe that way you can make more money. I don't know.
That's correct. That's correct, Abigail, because you're expecting better returns. It doesn't always happen, but you're expecting that. Okay. This is a balance sheet, guys. This is how it's shown. Assets, liabilities, and equity. Remember, assets, the right to collect or claim resources of the firm. Those are resources for the right to claim. Liabilities are debts. And the equity is the people who possess the right for the economic benefits of the firm, which also can be translated into a debt, both with a risk component, a riskier component. So what is an income statement? Anybody? Does anybody knows what it's an income statement? An income statement is a financial statement that shows the company income and expenditures. It also shows whether the company is making profit or losses for a given period. What is profit? Yes. And how do you generate profits?
By selling or providing any service.
Yes, perfect. By selling and having greater sales than expenditures. Okay. What we're actually gonna do, guys, what you're gonna do when you're reviewing your accountancy, or what you would do in case you want to generate your accountancy, is to send your bank statement to your accountant. Whenever you receive something in your bank account and whenever you pay something from your bank account, this will generate an accounting register. So the basis of your accountancy is your bank statement. How many of you have debit cards? Thumbs up if you have. Well, you should be in theory, doing your accountancy. I'm not kidding. You should be doing it. The why you don't have any issue with the tax authority? Because they don't have capabilities to go for all the world or all Mexico and register and review all Mexico. So obviously they go in priority order. But if you don't have your accountancy, you can have a liability in there, a risk of taxes. Okay. And that's the way that the IRS reviews. They go to the bank account and then they go to your IRS profile. Oh, he's receiving 100 in their bank account and he didn't declare anything. Okay. We have an issue here. Did you knew that?
No.
So be careful, guys.
Teacher, how we do like our account is like for the debit card.
That's what I want to teach you.
Ah.
You won't be an accountant for sure. You won't be an accountant, but you will be able to review with your accountants. So your accountant will get it wrong. A lot of times, even professionals get it wrong. But I want to give you the capabilities of review with your accountant. Okay? To discuss with them like, hey, this is not an asset. This should be an expense or this should be a liability, whatever. Okay? But now you know the source of the accountancy, your bank statement. Okay? What are you will provide with a database of all the registers. That's something that we will do today. But the final result of those registers is a very simple report that you can read in order to see what is the economic performance of the company. What is the first report? The balance sheet. In that, you review all the balances. Hello. You review all the balances of all the balance sheet accounts. And you have the income statement where you review the economic performance of the administration. If they are riding the company nicely, you will have bigger profits, right? That means that you're an efficient administrator. Do you want to ask something, Jessica?
Yes, Abby, my computer died, so I'm gonna be with her.
Don't worry, I saw you.
Thank you. Thank you.
So guys, you have your balance sheet and your income statement. These are the main reports. I will show you more. There are actually several more, but these are the basics and the most important ones. Okay? So the income statement, it is part of the equity in the balance sheet. The balance sheet, we can say it's like the father of the whole reports, okay? And in the equity section, when I was an investor, well, I'm an investor in a company. In the equity section, it will appear my name, okay? And also in the equity section, it will appear an account named current period earnings, okay? Like it says in there, current profit and earnings or losses. I don't want to see how much I'm earning or losing in just one account. So that's why accountants break down that part into what we know as an income statement. The income statement is income or sales decreased by the cost and the expense. It's like what enters to the company at what you need to pay in order to operate that company.
Can you repeat that, please?
The income statement is what you received as part of the sales, like the mock example, you sell this, this is the income of the company. But you have to, you don't pay, like if you sold it for 100, you are not making 100 of profit. You have to deduct from that sale the cost and the expenses. What is the cost of the and expenses of the mock? Who can tell me?
I think
The material, the paint, the paint, the labor hand that created the
I
mock.
have a question. Income is always about money, or it could be any asset.
Wait, no, that's why the first thing that we have to learn very careful, it's the definitions. An asset is very different from an income. The income is the source or the mechanisms where income enters the company.
For
Okay,
example, my stepfather is an architecture, and whenever he finished, I don't know, a work or a building or whatever, sometimes they paid him with, I don't know, an apartment and a house and something like that. Is that part of the income, or it has to be money specific?
they pay him what?
They paid him with, I don't know, buildings, houses, apartments.
That's income.
That's still part of the income, right?
That's part of the income. It will be an income because that is taxable. When you want to change the name of the building of ownership, because they are paying him with that, he has to pay, change the ownership. Rather, like receiving cash, you will have also an asset. The cash is the asset, which is if somebody pays me for this, you will have income reflected in your profit and loss, and an asset, which is the cash that you received. In this case, you received another asset, which is not cash, but it's a resource. And when you change the ownership of the building, the how do you say, el notario will retain some part of the sale of or the transaction, or maybe he will have to actually request to your father some money because they are obligated to retain what they have to pay as taxes. A little bit more advanced topic, but that's the way, David. Okay.
Thank you.
So expenses, it's the cost of doing business. You will see expenses and you will see cost. The biggest difference between the cost and the expense is that the cost is directly related to the sale process. The expenses are not. For instance, I'm selling mugs, but in order to have to sell those mugs, I pay a building for the administrative department. That building is a cost or expense?
Expense, right?
Why?
Because it's not really part of the mug process, but it's necessary for you
That's
to
correct,
generate
David.
income.
That's correct. And the person who created the mug is an expense or a cost? Okay, perfect, guys. Like I told you, what is accounting? The action or process of recording financial transactions. We have guidelines to review those transactions. That database that you will generate must follow these guidelines, which is IFRS. What is IFRS? We have more guidelines, but IFRS is the one that we will be using. And why IFRS? What is IFRS?
International Financial Reporting Standards.
Nice. And why IFRS and not Mexican GAAP?
Because it's used in more countries. I don't know.
Exactly. What do you prefer to learn? Just one country or 137?
International one.
And you're speaking English also, so come on. IFRS is the English of the financial language. So, guys, this is the table. Remember, my main goal of the whole semester is summarized in this table. I just want you to figure out how to know how to differentiate these 6 things. If you get it, I'm done as a teacher. If you don't get it, forget about all the things that I can show you and how to leverage your financial knowledge, okay?
Do we have access to this presentation?
The video recordings will be available, obviously,
Thank you.
okay? So the nature of accounts, guys, the nature of accounts is the most important aspect in the accountancy. Even accountants get it wrong, okay? What does it tell you, the nature of accounts? This is the whole accounting terminology. This is the summarized version of the accountancy. You only need to figure out if it's an asset, a liability, equity, income, cost, and expense. In accountancy, you will see a lot of names like this. This is a typical chart of accounts. But do you see that even cash, note receivable, account receivable, they are all assets, okay? And all the liabilities, which says it's account payable, salaries payable, on earned rent, those are
Explain us
liabilities.
the difference between debit and credit. I always forget that, please.
We will see it. What I want you to get is that at the end, you only have to learn 6 things: assets, liabilities. I don't care if it's cash or office equipment in the asset section, or if it's accounts payable or notes payable in the liabilities. What I need you to figure out is if it's an asset or a liability or the equity, revenue, cost, and expense, okay? So you don't even need to know the account names. You will start to learning them. But what I need you to learn is what is an asset, liability, okay? And the nature of accounts tells you if it's an asset, what is the nature of that asset? A debit or a credit? General rule for accounting, the accounting system, guys, for every debit, you have a credit. ¿Nunca habían escuchado la partida doble? Debit, credit. And that the accountancy always matches. It's always balanced. Have you heard of it?
Kinda.
Okay. You guys, for every debit, you will have a credit. The debits are positives and then credits are negatives. So if for every debit you have a same version of a credit, the final result of the accountancy system is 0. That's very important for you to understand, because we will start reviewing this type of exercise on how to assess any transaction from your bank statements. Like if I receive something, is that an asset or is that a liability? If I pay something, is that an expense? We will start reviewing those types of transactions, but this is the proper guideline. Obviously, in here, you don't find the definitions because the definitions, you already know them. But the important aspect is that once you figure out what is the transaction from your bank statement, you have to classify them into this. And the nature of accounts tells you if it increases, for example, the assets, if it increases with debits, the final balance of that account should be a debit. Okay? You will have debits and credits in all the accounts. You will see it right now. In all the accounts, you will have debits and credits. But this table is telling you that if it's an asset account that you will classify that operation, the debit side, the debit should be more than the credit. This means that if you adopt all the operations in the asset section, it has to have or needs to have more debits than credits. If that doesn't, if that formula is not respected, it means that you did something wrong. There's something wrong in there. Maybe your classification was incorrect. The same with the liabilities. It's in the other hand. It increases with credits and it decreases with debits. It means that you should have more credits than debits. It means that the final result of the liabilities will be negative. Negatives in the accounting system means debts. You are owing something to somebody. What is the definition of liabilities? Debts or the obligation to pay. What is the equity? The debt to a shareholder. That's the only difference. It's also a debt, but to the shareholder. That's it. When are you gonna pay the
Is there a
shareholder?
difference between the shareholder and the normal debt? I mean,
We spoke about it. What
yeah,
can anybody
shareholder
can anybody please help David? What is the difference between the liability and the equity in definition? Just in definitions.
There's a difference in the risk.
First thing, perfect. And why in the risk? Is it you, Belen, or Abigail?
Yes, it's me. I think that the shareholder is like more risky because you cannot obligate them to pay.
Okay, and both are debts, right?
Yes.
Did you get it, David? Both are debts. The difference is that the shareholder has the right to the economic benefits of the company. You will distribute the profit, the profits. That's why, and this is very, very important. The income in the income statement, guys, that you have in here, income statement, the income of the income statement increases with credits. As I told you, if it ends up with a negative sign, it means that it's a debt. Why the income is a debt? Because you should be paying that income to your shareholder. It's a debt to your shareholder. If I sell MOX, the 100 pesos or $100 that enter by selling this, I owe them to the shareholder. Obviously, I'm not gonna pay them the 100. I will pay them the 100 minus or decreasing what it costs to me to have that sale. What was the cost? What I expended to create this. So if the MOG costs $50, the profits from that operation is $50 also. It's 100 that I sold minus the cost of 50, profit 50. And those 50 will be presented in negative sign in the equity section because I owe those 50 to the shareholder. Do you get it?
If you do it the right way, whenever you sell that MOG, it's gonna decrease to 0. So even debit and credit are gonna be even.
Wait. You have to see it to understand it. I just wanted to tell you the complete explanation and the definitions. I always start with definitions, as Socrates said. the beginning of knowledge starts with the definitions. So the ledger, guys, the ledger is the database. This is a database. We can manipulate this database in order to create not only financial statements, we can create managerial reportings from this. You won't be able to do this. That's why you pay an accountant to do it. But the important aspect is that when you discover anything wrong in this database or something that doesn't sound correct for you, you will be able to ask to your accountant, hey, this shouldn't be an expense.
But I don't get it. Why you can do it by yourself? Why is the need for an accountant?
Because first of all, there's a lot of more specialization. It's hard to...
Okay, unless you study that, you can do it by yourself, right?
Exactly. But rather than be too specialized, because that's why you have accountants, the important thing is that everything is summarized into this. Everything. And if you are able to differentiate from this any financial operation, you will get it right. You don't need to tell the accountant, this is not the proper account name. You will tell them, hey, this is not an expense. It should be an asset. That's the important message, guys. So that is why the objective is to learn these 6 things. So let's start with the practical. Take out your Excels, guys. Just to finish the explanation, this is the final result. This is what we will start doing, okay? And let me erase
At the end of the
this.
semester, our sheet should look like that, right?
Not by the end of the semester, by the end of this day.
What?
Yes, you will start learning accountancy, guys. What you expected to learn it in 3 years? So,
Yeah.
question 1, guys. This is a normal, usual transaction where I created a company, Enrique. I created Enrique S.A.D.C.B., okay? And finally got my bank account. Do you know how much it costs to do that?
Are we talking about time or money?
To create a company. It depends of the type of company, but in the range of 10,000 pesos, okay? Just cultural knowledge. So I went with my friend, the lawyer, opened my company. I received my bank account finally. And when I received my bank account from my personal pocket, Enrique, I deposited $100. Now let's make it more because we have bigger operations in here. Let's do it for $1,000. I deposited $1,000 into Enrique S.A.D.C.B., which are different entities. That transaction generates a register, an accountancy register for the company. This is the company perspective, not Enrique's personal perspective. You should be doing both accountancies, but we will see the company's perspective. For the company, what does represent my deposit of 1,000? Anybody? Cri. I lost you guys.
I'm here, but I don't have the answer for that.
If I'm the creator of a company and I deposit $1,000 to my company, in the classification, in this classification, where you know the concepts, you don't have the concepts in here, but you know them. What concept represents for the company what I'm doing?
Maybe an expense because you are giving money, but it's like for an inversion. I don't know.
I gave a resource to my company, right?
So it's an asset.
So it's an asset.
Mm,
What is the asset?
$1,000.
Exactly. That went to the bank account. You don't need to know the account name. You just need to know that it is an asset. We will practice the account names, but it's not important. But for every debit, you have a credit. So guys, what should be the credit? To whom I owe that money?
To yourself, no? So it's 1,000.
To yourself. This is shareholders' equity. This is a debt to the shareholder. And this is how you start companies, right? Let's bring this in here. Assets, resources, and the right to claim. Bank, well, $1,000 is a resource for the company. Do you agree? And the shareholders, it's a debt like the liabilities. The only difference is that I have the economic rights of this company because I'm the owner. So this is equity. Assets increase with debit and equity increase with credits. Thumbs up if you get it, guys. Or do you have any question? Are you still there?
Can you repeat it? I lost signal for a minute.
Assets increase with debit. This is the presentation that I showed. It's just in another format. Assets increase with debit, equity increase with credits. So if somebody is reading this ledger or this database, has the possibilities of understanding that they gave money to somebody gave money to the company, gave a resource to the company, but they have a debt to the person that gave that resource. Until here, everything fine, guys?
yeah. Equity is the total of,
What?
is it the total of the asset? Or
I don't get you, sorry. What?
it's just, I got lost a little bit with the equity.
Why is it equity? Can anybody help me? Why is equity? This is what you do in an accounting system. This is what your accountants will do. You won't be doing it. But remember, the important part is that you know how to classify the things. So how is it that if I provide $1,000 to a company, that's considered shareholders' equity? Who can explain it to me? Guys, are you there?
If it's shareholders, it's because it's a little bit risky, right? Or it's a big quantity of money.
That's the difference between a liability and an equity. But by definition, I told you that both are debts, right? So this is telling me that you have a debt with whom? With a shareholder. Because it is my company. I'm the shareholder, right?
So
Does
you're
that make
giving
sense to
money
you?
the company, you're giving money to the company, but the company owe you the money. Is it that way?
Exactly. Exactly. Or anybody will give you money for free.
No, but
If
I
that's
mean,
the
for
case, I want to
example,
know,
company
I want to meet
has
them.
the necessity to give you the money back.
You have the necessity to, no, that's the difference between a liability and the shareholder's equity. You don't have to pay your equity. Why?
Okay,
Because you will pay them via profits or dividends. It's the more specific name. Okay. And you're expecting not to receive from dividends 100. You're expecting to overpass those 100 and still have the right to claim those 100. Okay.
So you're
That's
investing?
what?
You're investing?
That's an investment.
Okay.
When you open, it's the same as purchasing stocks in public stock exchange markets. If you want to buy shares of Apple, this is the same register when you purchase them. Their accountant will go increase the bank balance because you gave them money, and they will issue $100 of stocks, and you will owe $100 of stocks of Apple. The question would be how much those $100 represents from the total equity. If Apple is worth $2 billion, well, $100 would represent 0.00001%, right?
that the equity from Apple, it came from where? From the costs?
From where? First of all, you didn't see the Jobs movie,
No, I didn't. Sorry.
and it applies to all the public and all the companies basically. This is the same thing for all the companies. So, can you repeat the question?
Okay, my question is, most of the money that Apple has, the equity, it came.
Where did
from
they get them? At the beginning? At the beginning? Oh, that's a huge question, David. At the beginning, I will tell you everybody does the same as this. I create my company, I give my company some resources. But it's very hard to maintain a company with your own resources. Only if you're a millionaire, or I've seen only cases when
you
you're a
need
millionaire, you are
investors.
able to maintain your company. So this is why you get financing for your company. And what is the financing? Debts for your company. You can get them as liabilities, as debts, or you can get them as shareholders' equity.
But finance, so that's part of the bank or of the investors.
Yes, and the question in here is how would you convince any of those to finance your company? That's the trick.
Something in change, right?
Yes, but who will give you something in change? Just if you open a company, that's just paper.
But when you start selling, you have a percentage of the income, isn't it?
When you start selling, But how you will generate the selling, those sellings? You will have to have something interesting from people, so they can purchase you something.
With a marketing strategy.
Yes. Now you're relating all the company aspect. Yes, yes.
Okay, so
And those are processes for businesses. So we can start like delivering like, okay, so I need or must generate a good value proposition. So in order to make people want to purchase my services or my product. Okay, it's not only having a great product and a great value proposition. If nobody is able to watch my services and my product, nobody's gonna realize that I have a good value proposition. So I need to invest in marketing to achieve greater audiences, to tell them, look, I have a great product. My mug is special.
okay, so financement or liabilities, then, because you had to repay them.
You have to repay them. How would you pay your shareholders? Via dividends, via profits. And how would you pay your debtors? It's from your bank account. But only if you generate more sales than what you need to pay them.
The money given.
That's why for companies, one of the main issues is always liquidity. Liquidity means that you are capable of paying your debts. Otherwise, what would happen if you are not able to pay your debts, guys?
You'll go bankrupt.
You go bankrupt. And it's super interesting what happens in a bankruptcy procedure. I know it by fact.
They put you in jail, right? So
No, that's why I told that's very good, David. They don't put you in jail. That's why you open entities, because that's another legal person. It's very dangerous to make business with your name, because if it's your name, you will go to jail. But what if you are capable of doing businesses without having to have that risk? That's why we open businesses, and that the business or the legal entity is like the incentive for the entrepreneurs to do business.
I have a question. What about
Yes.
brands?
What?
Like brands, a brand that has the name of someone, like Carolina Herrera, to say something.
Carolina Herrera, it's a brand.
Yeah, they don't have the same problems as a company.
No. That's a brand. You can put Jessica brand, but that brand is registered by the legal entity, I don't know, Jessica SADCB. That Jessica SADCB, it's different from Jessica. And what happens if you go bankruptcy, that legal entity, you as an investor are responsible only to the extent of what you gave as equity to that entity. So that's why you want to have low capital. If you enter only 500 pesos, you are responsible only for 500 pesos.
So that's why people that have money invest in different projects and not only one, because they can lose a lot of money.
I didn't hear you properly, David.
No, I told you that that's why people that have money and doesn't invest specifically in one project. They invest in a lot of projects so they can lose all that quantity of one.
That's called diversification. That's a little bit different, because that's an advanced topic of or finance. I can tell you how to diversify the risk and that, but at the end, just take into consideration, guys, if you open your business with a legal entity, you won't be responsible if you bankrupted. Obviously, that's why at the beginning of companies, the bank doesn't lend you money. It only lends you money if you're capable of showing that you generate a lot of money capable of paying a debt, or they will request to you a guarantee. Okay? Because at the end, if you bankrupted, they can take your home or what you put it as a guarantee. Otherwise, if they just lend you and you bankrupt the company, they don't have any way to charge you. Interesting, no? That's the beauty of investing. So, guys, first day of operations, and I did a credit sale for $100. My accountant registered what elements of this table this operation involves. I did a credit sale for $100. How would you register a credit sale? And what is a credit sale? First of all,
Is it the money that the company gets because they sold something?
yes, but the difference of being a credit sale is that I sold to you, Jessica, this mug, but pay me in 30 days. Because you didn't have the money right now, but you know that you will have it in 30 days.
Like the cards, no?
A little bit different, but
Like the credit cards that you use the money and you have to pay it later.
the thing is that the bank gives the money to the car owner and you owe to the car, to the bank, sorry.
Yeah, they pay for you and you have to pay them back.
Yes, but the bank, what is the sale for the bank? It's not the lending
The
process,
interest,
because at the end, they pay 100 for the car and you return them the 100. So that's not sale for them. The
Yeah, but
interest is the sale process. Yes. But at the end, so this is, I'm sold to Jessica this mug for 100. But I told you, pay me the next month or pay me tomorrow. Does that make sense to you guys? What is that?
Is it like this the example yesterday about the computer?
It is like the example.
Okay.
Would you be able to sell? Yes, if I'm able to know how she's gonna get, or you're gonna pay me, I would sell it to you.
But I
Maybe
need
if
some-
we can sign a pagaré, or you can give me the possession of your house if you don't pay me.
Okay.
Okay. So guys, from this classification of concepts, a credit sale, what is? Who can tell me the concept of the assets?
The money that was given.
Resources and concept of assets, guys. Resources and
The right
the right to claim.
to claim.
If I'm selling you something in credit, Jessica, do I have the right to claim something from you? What do I have the right to claim to you? Money, right? So it is an asset. It's an asset called accounts receivable. In Spanish is cuentas por cobrar.
Hey.
O clientes. También lo pueden llamar clientes. Este cliente me debe, ¿cuánto? $100. Perfecto. For every debit, we should have a credit. What is the credit side? What is the credit account?
It's an increasement
Increase in what?
on debit.
No. What is the element of the balance sheet and income statements?
Was an
We know that the first one that comes, the right to claim from Jessica was an asset. But what's the credit side? Let's review it. We have
The
asset,
liability,
expense,
Expense.
liability, equity, and revenue. What is revenue, guys?
Revenue is.
The revenue is a synonym of sales and income. Synonyms, all of them.
Okay. So the revenue or the income.
Revenue is income. And I sold a mug for 100 of credits. What am I missing?
The sales income.
No, I missed the sales. And if you remember this nature of accounts, revenues or sales or income increase with credits. Why? Because of the example that I told you. I owe that money to the shareholder. It is a debt. I owe that money to the shareholder. Does that make sense to you?
So when I give the chance someone to give me money, but they are not paying me, I'm also owing money because someone is owing me
No.
money.
Somebody's
Yeah,
owing
I have
you
the same
money. You
question.
have the right to claim. You don't have the obligation to pay. That's different. The obligation to pay, it's called a liability.
So for example, the shareholders are as sponsors.
The shareholders are what?
As sponsors. So
You can tell it in a very
I mean, for example,
bad definition, but yes,
Yeah,
we
I
can
mean,
consider
like,
them as sponsors.
like an athlete that has sponsors, he doesn't really have to pay them to be with them, but they were
Well, I
guaranteed.
think the biggest difference, my friend, is that an sponsor is not expecting an economic benefit. It should be more like they are expecting a service. Like I sponsor you because maybe you put my brand in your uniform, and
an
that's what I
economic
want
benefit.
to.
But that's an economic benefit, isn't it? Because
That's a service. It's different. It's different. You're giving
But
money
that
to provide the
results in an
service
economic
of
benefit.
showing your logo in my uniform, but it's way different than being a stakeholder.
But I mean, the purpose of carrying someone's brand is to make money. So people see you using that brand. So
Yes, but it's more like a marketing service, not it's
Okay.
not like a stakeholder.
Okay, I get it.
Okay,
A
that's why
shareholder
it's
is more of like an investor.
the shareholder synonym. It's an investor. A shareholder is an investor, not a sponsor. investor. So guys, until here, are we good? Can we see the following one? This is what I need you to communicate with me, because if you don't learn this, I prefer to go again and again and again until you learn it. Because otherwise, we won't be able to review anything. You won't understand it.
Nah, the good thing is the class is recorded.
What?
The good thing is the class is recorded.
So from the previous operation, and this is the last one, so we can go and eat and grab and eat. And from the previous operation where I sold $100 to be paid in the future, as it was a credit operation, the cost of the operation is $50 to be paid in the future. Jessica, the difference is that my company sold to you, te vendí esta tasa y te dije, págame el próximo mes. Es un asset para mí, lo que el derecho que tengo sobre de ti de cobrar algo, $100. No me los has pagado, no entraron a mi cuenta de banco, que mi cuenta de banco también es un asset. Cuando tú me pagues, voy a cancelar ese derecho y como tú me lo pagaste, pues ahora ya tengo el recurso, ya lo convertí en un recurso. Pasó de un derecho de cobrar a una cuenta de banco, pero la venta sí se hizo, sales, y ese dinero en teoría se lo debería de dar a mi accionista. Le pago a mi accionista los $100 de la tasa. Pregunta. ¿O no tengo que reducir de esta venta lo que me costó hacer la tasa?
Sí.
Pues ahí está. Es lo que dice aquí. From the previous operation, I sold $100 to be paid in the future, as it was a credit operation. The cost of the operation is $50 to be paid in the future. ¿Le estoy pagando a alguien? Ahí dice que salió de mi banco. Dice to be paid in the future. Según las definiciones de esto, ¿qué es to be paid in the future? Para mí, ¿qué genera? Para mi empresa, ¿qué genera?
An expense.
Ojo.
Un asset. Un asset. Un asset.
Assets son recursos y el derecho de cobrar.
Entonces es un asset.
¿Tienes el derecho de cobrar algo?
No, más bien tengo que pagarlo, ¿no?
Tienes que pagarlo. ¿Y eso cómo se llama?
Liability.
Exactamente. The obligation to pay, la obligación de pagar, es un pasivo. Liability. ¿Ok? ¿Qué son las liabilities? Deudas. Entonces aquí tenemos un liability que se conoce como, en este caso se llama accounts payable, cuentas por pagar, o también se conoce como proveedores. Así como las cuentas por cobrar se les conoce como clientes, accounts payable también se le conoce como proveedores. ¿Con qué incrementan los liabilities?
Con el credit.
Con el credit. Entonces es 50 el credit. Y siempre negativo los créditos. ¿Ok? ¿Por qué? Porque chéquense, si todo está balanceado, partida doble, principio de partida doble, para cada débito hay un crédito y para cada crédito hay un débito, el resultado, la suma de todo es cero.
Pero una pregunta, si la suma de todo es cero, o sea, porque estás pagando lo que te pagó, y estás vendiendo.
Lo vas a
no
ver
hay
en los
ganancia, pero hay
reportes y
ganancia.
estados financieros.
Ah, sí, 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 pero por ejemplo, ahorita hay alguna ganancia con todos los números que me has dicho?
Paciencia, lo vas a ver cuando veas los reportes financieros. Yo sé que pues es que se elimina todo y da cero, ¿no? Pues entonces no estoy reportando nada. Es un tema de clasificación, lo vas a ver. Pero vamos a terminar este. Y si quieres, ahorita lo vemos. Ahorita van a entender balance general e income statement, pero primero es cost, ¿no? Tenemos venta y el costo del MOC dijimos que era 50. Entonces, el tema aquí es, ahora vamos a quitar de aquí esto y chéquense. Los assets son parte del balance sheet, ¿ok? Y le metí $1000 a mi empresa como stockholders equity, como shareholder. Y entraron esos al banco. Entonces, en mi banco traigo 1000 y 1000 del stock. Aquí está el primero. Después vendí 100, que es cuenta por cobrar y que es un asset. Pero el sales no forma parte, por así decirse, del balance sheet. Forma parte del income statement. Y tenemos 100 negativos de sales, porque hay que respetar el signo, ¿va?
Pero no el balance sheet y el income statement.
Espérame. Ahorita lo vas a ver. Sí, sí. ¿Qué pasa si yo no registro el costo todavía? Voy a tener un profit and loss de menos 100. ¿En dónde va el profit and loss? En el equity. ¿Y cómo está? Mi balance sheet. Balanceado, ¿no? Y esto es lo estoy llenando con las operaciones, ¿eh? Yo nada más puse aquí los 100 de cuenta por cobrar y las ventas de 100. Sales de 100. Mira, más bien, este más que aquí debería ser aquí. Ahí está. El último, liabilities de accounts payable de 50 menos 50. Y un costo, el costo tiene una naturaleza de débito, al igual que el costo es como un expense. Expenses increase with debit. Sí, increase with debit. ¿Qué le pasa al profit and loss?
Aumenta, ¿no?
Disminuye. No le debe 150, le debe 50.
Ah, pues,
Y acuérdate, ¿por qué si es una ganancia es negativa? Es porque esa ganancia se la debes al accionista. Por eso el equity es una deuda. Le debes 50 en estos momentos, esos 50 se los debes al accionista. ¿De dónde vas a sacar para pagarle esos 50? Pues en estos momentos tienes 1000 en el banco. Se lo puedes pagar, pero pues lo mejor es que te esperes a que cobres esto, ¿no? De aquí, cuando lo cobres, le puedes pagar a tu vendor y a tu accionista. Y ahí están tus 100 que recibiste. ¿Ya entendieron? Todo está balanceado.
primero sales de las deudas para después tener la ganancia.
No lo sé, eso se tiene que analizar. No es un assessment correcto. A mí me encantaría que fuera siempre así, pero no siempre se respeta. Y es más, ¿quién me puede decir la rentabilidad de esta operación? Aquí les estoy mostrando que la rentabilidad de esta operación es del 50%. Ya lo iremos haciendo. No se preocupen si se trabaron en algo. Vamos a seguir repasando hasta que les quede claro, ¿vale? Por eso les dije, al menos un mes, mes y medio, necesito que me tengan paciencia porque me encantaría ir súper rápido y decirles todo, pero pues así es la onda. Ya después ustedes me van a empezar a corregir a mí. Órale, muchas gracias a todos.
Gracias a usted, profe.
Gracias,
¿Quiere
profe.
usted comentar
Voy a
algo?
subir el
Sí.
recording, en YouTube, hoy lo tienen, ¿vale?
Profe, me pidió Emiliano que le avise que estaba en campus, pero no tenía internet. No tenía buen internet.
Ok, bueno,
Y yo, bueno, soy Abigail, para empezar.
sí.
Y ayer intenté hacer el quiz, pero no me agarró. O sea, le ponían a hacer quiz y no me llevaba a ninguna página.
Entonces déjame checarlo, ¿vale?
Ujú.
Perfecto, pero muchas gracias, Abigail. Cuídense, nos vemos en línea el próximo martes, ¿vale?
Profe.
Hasta luego.
Hasta luego, bye bye.